Hi, Jessica Amir here for the Finance News Network with Antares Equities Elite Opportunities Fund Portfolio Manager Nick Pashias. Hi Nick, how you going?
Very well, thank you.
So first up, for new investors, just give us an introduction to the fund.
The Elite Opportunities Fund is our concentrated offering, so it owns no more than 30 companies. And within that we have two buckets. 80 cents of every dollar goes into core stocks, what we call core stocks. These are companies that we're happy to own over the long term. The other 20 cents is invested in what we call trading opportunities. These might be short-term oriented positions that we take, but they help the overall performance of the fund. So that's how the portfolio comes together.
So how has the fund performed and where have most of the gains been made?
Yeah, the portfolio's performed pretty well over the long term and over the short term, pleasingly. So we've generated returns above the index and also after our fees. So that's positive. Over the last 12 months, a lot of the performance has come from our big position in Rio Tinto, so that's generated a lot of performance. Also, our position in Qantas has helped. Not owning companies like Telstra has also helped the performance of the fund.
And Nick, you've just returned from a fact-finding mission in China. What did you learn?
So I just got back a few weeks ago. It was a really good trip this time. So we got to meet members of the IMF, we got to meet members of the RBA, we got to meet some of the trade delegates that are negotiating the trade deal with the US and China at the moment. So very interesting trip. I guess a couple of things that came out of it. The first thing is that some of the themes that we've seen over the last few years are certainly continuing. So China has a strong focus on improving its environment and also on deleveraging, and those themes came across. But some of the new information that we gathered was that there seems to be an increased influence of the party, the central government, into the deliberations and into the business decisions of corporates. So we got that throughout the spectrum. We got that from the very small corporates that we spoke to all the way to the big ones. The other development was that wages seem to be increasing in China, so the gap between the highest earners and the lowest earners is reducing, so because they're paying their workers more. And those are interesting things over the long term to watch, because they could impact inflation over the long term. China's cost of doing business seems to be increasing, and we need to, as investors, we need to be aware of that over the long term.
And lastly, Nick, what's your outlook for the fund, and tell us why you think investors should be adding this fund to their portfolio?
Sure. The fund as it's positioned today is we're overweight some of the cyclical companies, and we've been overweight some of those for some time, which has done well for us. We're also very underweight some of the stocks that are adversely impacted by higher interest rates. So what I mean by that is that as interest rates rise, these stocks should come under pressure in terms of their share prices. These are companies like the real estate companies, the infrastructure companies, some of the telcos. We're very underweight that part of the market. Conversely, we're overweight stocks that should benefit with interest rates increasing, companies like Computershare and QBE. In addition to that, we've got a big overweight position to consumer-facing companies, so companies like Tabcorp and the Star Group, which were overweight, and Qantas, which I mentioned earlier. So that's how the portfolio is positioned. But I guess the reason why I think investors should invest in the fund is because of the long-term track record of the fund, the sustainability of the team. We've been together for a long period of time, we're well-resourced, we're experienced, and hopefully we'll be able to generate the types of returns that we have done so in the past, in the future.
Wonderful. Nick Pashias, thank you so much for the update.
Thank you, appreciate the opportunity.